Hey guys, hope you're having a great day out there. Today's video, we're going to go over how to invest in stocks the easy way, so stay tuned. Welcome to the channel. If this is your first time stopping by, thank you. My name's Andrew Ferguson, and today we're going to get you going and started on how to invest in stocks the easy way. These are the real processes that I use myself, and I only recently became a stock investor back in 2019. So this is really fresh content, and I'm learning all the time, but it's all about education, and it's all about continuing to build on your knowledge base to take you further on in life. Don't forget, before you leave, drop a comment below, hit the like button, hit the big red button to subscribe to the channel. That way you stay tuned for all our future content. Alrighty, getting right into it here. How to invest in stocks the easy way. Wrote this article a couple months ago. I just started working and started investing myself. And I thought it was a good time for me just to kind of go through what I kind of did to get started, and we'll go through it together. And then hopefully you guys have a better understanding of how you can find a really simple way to get in the stock market, to feel confident in what you're doing, and to go for it and jump in, okay? And like I said before, most articles that I saw out there, it kind of explains what the stock market is and how you can set up an account. But I really want to focus on the easiest way to get going and to keep you guys from being too intimidated, right? That's what I hear a lot is people, oh, I can't do it. It's too confusing. I don't know where it's going to go. It's unpredictable. And that's true if you pick the wrong stocks, but you just have to focus on good quality companies, and we'll get to that and the rest of it moving forward here. So just stay tuned here. So we're going to go for the long-term goals, blue chip companies, dividends, what they are, why they matter, a couple of free online tools for you guys, and where you can actually go and set up your own accounts if you want to take that next step and actually get out there and start investing. So there's no real get-rich-quick scheme here. It's not that easy, and if you do find out how to get there and do that, please let me know. That is what I would call the holy grail of investing. So if you find that get-rich-quick thing, pass it along, please. I would love to see that. That has not been something that I've been able to see in my investing career to date. What it actually does take is these things here: vision, planning, confidence, adaptability, commitment, all those 5 things right there. And these take time to master, guys. It's not like you can just go out there, start trading, and you can just get out there and get profitable right away, okay? But hopefully you're here because you realize that working like crazy for a few years is better than grinding it out at a 9-to-5 job into your 60s. Like, that's not what we want to do. My whole philosophy is about making side income, investing to create a financial future that's stable for myself and my family, okay? I hope that's why you're here too. So first things first, before you get going, write down your goal, read it out loud. Let's make it specific, okay? This is my actual goal that I started with when I started investing. I want to create a life of freedom for myself and for my family. Once my stock investments reach 750K, I'll be able to retire, make my own schedule, travel the world, volunteer my time coaching sports. I'm a big basketball guy, so that's important to me. I want to be able to give back, okay? The initial goal of reaching, like, being rich is one thing, but we want to dig deeper, and then having a goal, it gives you more meaning, more purpose. So when you have those days where things aren't going well, having that goal written down and it being accessible is a great way to come back and focus on what you're trying to do and what you're trying to accomplish. It just kind of gets you centered, okay? There's been a lot of research done as well, and that those who set goals are more proven to be successful. I have a nice link in here. If you want to go into a deep dive of it, you can read from the Science of People, and they have the actual science behind goals, investigations, research, why they're important. So if you want to go into it, you don't believe me, please read that article. It's a really good resource about why you should set goals and why they matter, okay? And then just another thing, like, don't get out there and start thinking, oh, this guy makes $10,000 a month. This guy makes $20,000 a month. This lady makes $50,000 a month. That's not what we're here for. Don't compare yourselves to others. It's your own journey, your own path. You're going to get there at your own speed, right? So take your own time. Don't compare yourself to anybody else. You don't know what their situation is. They might have millions of dollars in a trading account, and they're being very conservative, making that money. They might be super high leveraged and taking on huge risks that you won't want to do, and risking basically their entire portfolio. So just trade for your own personal satisfaction. Don't compare yourself to anybody else. It doesn't get you anywhere. So we're going to start focusing on the blue chip companies because they're the easiest things out there. And if you don't know what a blue chip company is, just think about something that's been around so long that's like almost too big to fail, right? I got some examples there: Amazon, Apple, Walmart. Those are the big boys, the big players, right? They're things that people just depend on all the time, and we use their products every single day. Here are a couple other ones: Google, Visa, Costco, Home Depot, Starbucks, right? Their products are constantly being used, so it's going to be really hard for them to kind of go out of business. It's going to be really hard for them to lose their market share and lose their control over the markets, because when any kind of competitors come up, they just buy them out, and then they don't have that competitor anymore. So they're almost too big to fail, right? How much can you make? It kind of depends on how much you have, right? We're looking at basic returns of the Dow Jones. It's been about 7.4% per year, and it might not sound like much, but if you started with 20K 30 years ago, today you'd have 170, and that's just with that 20K. There's no actual other money that you're putting up. You're just reinvesting all the profits right back into it, and that's the easiest way to invest. Just pick these blue chip stocks, let your money sit there and ride it out over time, and just let time do its thing. One thing I wanted to say is, though, yeah, no guarantees in the stock market. There's nothing that may never go down, may never go up. It's totally random. People have trends that they follow, and stock guys who pick their things on Wall Street have best guesses, but there's no actual crystal ball that says this stock's going to go up tomorrow and this one's going to stay there. It's just not a known thing, and anyone that tells you differently is just full of it. Like, there's no one out there that knows what stocks are going to do day to day. So don't believe that crap. You have to take an acceptable rate of risk for an acceptable rate of return. That's the name of the game here. And that depends on your risk tolerance, right? As I've outlined here. But what seems more risky to you, right? A blue chip company that does these things, right? Risk is low, return is low. You have a company B that's a new startup. Risk is high, return is high. They have no customers, no track record of growth. They compete against the blue chips. That's why, for my money, the safest thing you can do is just go buy a blue chip company stock and just let it ride. We're trying to minimize risk and accept a smaller profit. And Warren Buffett, if you don't know who he is, he's one of the richest people in the world. He's been investing for a long time. He's got two rules: don't lose money, and don't forget rule number one. So it's all about being consistent, taking low risk. And the other quote I like from Warren is that he says, be fearful when others are greedy, and greedy when others are fearful. So when everyone else thinks that the ships are sinking, that might be a good time to get in. And when everyone else thinks that it's too good to be true and they're all jumping on board, it might be a good time for you to kind of just say, hey, let me take the pedal off here, and we'll sit back and reassess what's going on. But blue chips are in line with Warren Buffett's rules. He's a multi-billionaire, and it's all from investing. So if you want to take it safe and take it easy, just look for blue chip companies to start out, and you'll reap the benefits of those shares. Dividend stocks. Oh, the big boys, the golden gooses, I like to call them. There's two ways you can make money when you trade stocks for beginners, right? Or anybody, rather. What's known as a capital gain, which is just basically you buy low, you sell high, right? You buy at 180 today, and you sell a week later for $1.90. You just made $10. That's capital gains. It's just profit, right? The other way is to do stock investing is by what's known as a dividend, and it's something that a company pays out when they have extra profit. Usually goes once every 4 months, and basically it's just rewarding customers for buying the shares of the company. And a quick example here with Coca-Cola. Current stock price when we wrote this was about $45 a share. If you purchase 100 shares, the dividend right now is $1.64 per share, giving you $164 in your pocket. So you could, in theory, spend $4,500 to get 100 shares of Coke. And because you bought those shares, Coca-Cola is going to reward you by paying you $164 over the course of the year. Not a bad payoff. The percentage of that is, don't have my calculator with me. Oh, here we go. About 3.6%. So, I mean, you can invest it at a bank for 1%, 2% maybe. You can go buy a company like Coca-Cola where you might get some capital gains as well and some dividends, and then you're getting your better returns, right? If we combine Coca-Cola's dividend at 3.6% with yearly averages of 7.4 back from the Dow Jones we talked about a little bit earlier, now we have a stock that's making 11.4%. Now that's a big number, right? 11% a year is a good return. You're not piddling around with 1% and 2% at the bank. You're making a decent return on your money. And if we do invest $20,000, 30 years, and we end up with 462,000 and change, right? If we did this with just 7.4%, we'd end up with 170. So the extra 3.64% of the dividend makes a huge difference. So when you're starting out, you want blue chip stocks, you want stocks that pay a dividend, and you can target your own dividend rate. I like to see something around 3% or higher. You don't want to go too high because sometimes when companies pay out too much of a dividend, then it's not sustainable and ends up getting cut, which is where we're going to look at the Dividend Aristocrats. And you definitely don't want to have a company that cuts their dividend. And these guys, the aristocrats here, they are the best of the best when it comes to paying dividends. They're both Canadian American companies. Let's start with the Americans. There's different criteria, right? American ones, 25 straight years of increased dividend payments. No matter what, stock market goes down, there's a crash, company doesn't make money, they are increasing their dividend payments. They have the capital in reserve to do that. That is a solid company. They're somewhat recession proof because of all the cash they sit on in their business operations. And just like all the blue chip companies, these guys have been around a long time, probably more than 25 years worth, and they just keep paying out dividends, which is great. But that's the kicker right there. 25 years, consecutive dividend payments. That's a commitment to shareholders. For Canada, it's a little bit different. There's not as many companies, or I don't know if there's any companies that fit that criteria. So the regulations are 5 straight years of increased dividend payments. It's got to be on the TSX, which is the Toronto Stock Exchange, and a market cap of 300 million Canadian dollars. So these Canadian companies might have the track record that the Americans do, but these are still the best of the best when it comes to paying dividends. And if that's what you're focusing on, just focus on these lists. You can check them out here. The links are right here. I'll put them in the bottom of the video as well. You can check the U.S. dividend lookup as well, Canadian. All you do is open her up, put in a symbol name. Let's go Canadian. Let's go RNW, which is a gas company out in Alberta, TransAlta Renewable Energies. If they're an all-star for dividends, they'll have 5 stars here. Let's try another one. TD Bank. So boom, there you go. You see TD Bank, 5-star. They're a dividend aristocrat. They have a dividend yield of 3.9%, and their dividend payout rate's $3.16 right now per share. So that's an easy way to check if they're a good company. They've had 9 straight years of consecutive dividend increases, which is great. So there you go, making it nice and easy for you. Keeping things as easy as possible. You have a blueprint now. You can go and you can invest in stocks. All you have to do, step 1, write down that goal. Step 2, favorite list of blue chip companies that we talked about earlier. Step 3, if they're a dividend aristocrat, that's awesome, even better. Step 4, trim that list down to top 5 or 6. Get after it, start investing. And this is, from my experience again, the simplest way to invest and make money. Like I said, nothing's guaranteed in the stock market, but this is a great way you can stack the odds in your favor and get a quick, easy start and get your feet wet, and then you can go on from there, right? This little guide, the Ultimate Stock Cheat Sheet, I'll put a link in the description below. This is the step-by-step, just kind of spaced out more with a few more things that you want to look at when you're investing in stocks. It's a great little resource for you if you want a little bit more information. It's available in the blog post. Yeah, I can also put the description below, so check it out down there. Quick little overview of that. Just goes through the company, a couple more things here. I give an example of different stages of stock growth. You can see there's different stages of stock market trends. You can get familiar with that. And a couple more things that you can look through, and then eventually you're executing the trades. So definitely take a look at that if you want to get a little bit more information. Name and email, click there, and boom, that's all you need to do. So let's get into a couple tools that I use personally for investing in stocks. They're all free, which is great. Yahoo Finance is awesome. It's free. I create a watch list for my favorite stocks, and I use it to check stock charts and just kind of review companies that I'm worried about. If there's something in the news or if there's a shakeup or I want to just kind of dig a little bit deeper into the financials, go over to Yahoo Finance, type a company in the top, start with Apple, click on it. Should pull up Apple, gives you the stock price, some financial information here, the little quick chart. Companies that people also watch in addition to Apple, all the big tech there. And then it's got the profile, the actual full chart, some conversation, which is kind of like what's in the news, statistics for the company. And it's also got your historical data, financials, analysis, all these other good things that you can look at. Anything you really want to know about these companies, you can see it, and it's readily available for you there. That's my first one. I use that just to track things. My watch list looks like that. There's a bunch of them in there. And it just gives you up-to-date stock prices, what the trends are doing, how much volume there is, that kind of thing. It's a good overview of what's happening in the market for those stocks I want to check out. The next one is a portfolio backtester. This one's pretty cool. So you can actually input all your stocks that you want to track. Say you have your list of 5 or 6. You can actually go to the backtester portfolio and pull it up. And this is what it looks like here. Let's say we start with $10,000. You leave all these things the same. You can change your year, start year, end year, but I'm going to leave it the same for now. Let's keep it all the same. And then we're going to just add a couple companies. So let's go Microsoft, go Home Depot, Lowe's. Pop up if it doesn't know what you want to do. Let's go Apple, Big Tech. And first, let's go with BMO in Montreal. So we click here, portfolio 1. You can backtest up to 3 at a time. And I'm just going to allocate the weight equally, which means they all get 20% of that $10,000. Come down to the bottom, you analyze your portfolio. And what it tells us is that from the initial balance of $10,000, we get a final balance of $1.7 million. So if we invested $10,000 evenly across these companies back in 1985, we would have, or 1995, we would have ended up with $1.7 million today. And that's a pretty good return on investment. That's with just $10,000 being in there. So if you want to look at companies that have a good track record, you want to see what your portfolio looks like over time, you can do that. And there's also a couple other metrics you can check out here if you want to get a little bit more in depth with it. But that's just a quick check. See if you're picking good companies. If you have $10,000 in here and it goes down over the long term, they're probably not great companies for you to start with. Keep checking, keep looking out for other ones. But all the blue chip dividend paying companies generally have an uptrend and they make money. So you should be pretty safe with them. So that's the portfolio backtester. And you see how that works. I gave a quick demo in the blog post as well, but I just gave you one so you can just use that. The Berkshire Hathaway portfolio, that's one that just tracks Warren Buffett's trades. And remember him, he's the 4th richest person in the world. It lists all of his trades for the quarters, and you can see them all there. Buffett Watch, and this is his actual portfolio holding of his company, Berkshire Hathaway. So if you want to go and see what Warren Buffett's investing in, you can copy him if you want to. It's all totally up to you. This is all just educational, right? You got to make your own choices out there, but that's what he holds, and it's public information. It's worth noting that since 1965, the guy's got a 19% annual return, which is just bonkers compared to what the markets have done. And then CNBC, I use this on my phone mostly. I don't really go on it too much online. I just get updates with different news events, stock market news, world news, basically any kind of news that will impact finances, the presidential election, anything in Canada, because I'm from Canada and Canadian news as well, the Prime Minister. It's always good to kind of have an education of what's going on in the world. And I used to hate watching the news. I used to despise it. It wasn't a thing that I enjoyed at all. When CNN or anything got turned on, I was like, I'm out of the room. I don't want to care. I don't care. Give me sports and watching cartoons and stuff. But the news is actually super valuable. So get plugged in, even if it's just for half an hour a day, 10 minutes a day. Just start seeing the headlines and seeing what's going on in the world so you can have an idea of what's happening, what could impact markets. And finally here, we're going to talk about where you can set up an account. You can go traditional and go through like a broker, through your bank. But what I've found is that their trading platforms are somewhat archaic compared to the discounted brokerage that I use myself. And the trades cost a lot more. My CIBC account, it cost me $8 to put one trade in, and the discounted brokerage is $1. So $7 a trade. You better believe I'm going to the discounted brokerage. And if you feel comfortable, or when you feel comfortable investing in yourself, you're going to be the one making all the moves anyway. So you won't need to actually get the bank's help or call a broker up and say, hey, I need to place a trade. You're going to do that all yourself. You know what you're doing. So I would just go discounted brokerage all day. If you want to talk to your financial advisor about it, for sure, do that if you feel more comfortable that way. But there's so many good discounted brokers, and there's a bunch here I list from Bankrate and NerdWallet. They go through the best ones for like an online desktop platform. There's also the best ones for the stock apps on your phone. And that's what I use. I use Interactive Brokers for my trading. It's great. They have a really good desktop version as well, but I like the freedom of just being connected to Wi-Fi, trading machines in my pocket, pull it out, make my trades when the stock market opens, check it a couple of times the rest of the day, and away you go, right? So the last thing here, practice makes perfect. There's always going to be learning curves, and I recommend you guys set up a paper account. It's like a practice account with fake money, so you don't have to actually put anything at risk at first. That's what I did, and it took me about a month to get comfortable with just how it all works and how you enter trades. You don't want, the worst thing you can do is go and enter a trade, and let's say you want to buy instead of sell, and then you sell instead of buy. Like, you want to flip it around. So try to open a paper account if you can, and just do it that way so that you're feeling super comfortable with it, and then move on to some real money after that. So again, just to reiterate, set your goals. Have a passion, right? What keeps you going? Make a list of companies that you want to use. Make sure they're blue chip. Make sure that they're dividend paying. And then start with a practice account. Open up your real account once you feel comfortable, and go and execute your strategy. Yeah, no investor makes money every time. I've lost money. Warren Buffett's lost money. Everybody out there loses trades sometimes. Just try to limit your emotions when you're in there, and let your decisions be based on your system, and just follow the system to make some cash, right? So if you guys want to stay connected, there's an option to do that at the bottom of the blog post there. You can just put your name and email address in there, and I'll make sure to include you guys in any email blasts I get with new material. Other than that, time for the question of the day. I want to know what stock you guys are going to invest in first. What is that one stock you guys think is going to do well? And you might not have that much knowledge or background, but what is the one company or one stock that you're excited to go get there and go invest in? That's all I got for you guys today. You guys are well on your way now to have a good idea of how to start investing in stocks the easy way. You can check out some of my other videos. I've got a great one on 7 tips for beginner stock investors. You guys can check that out. It'll pop up in the link above, and give that a look as well. Some good stuff there. But remember, it's all about education and continuing to grow and learn and just to get better over time. Thanks for stopping by, and we'll see you again soon.